Okay, good afternoon. I hope you're all doing well. I'm Sandy Jadeja. I'm the Chief Technical Analyst for Vix Index, and I'm based in London, but spending quite a bit of time in Singapore over the last 9 months. And it's been an interesting journey to really find out what investors and also traders are looking for here in this region. I also work with some of the media channels, predominantly CNBC and, of course, BBC and some of the other major channels, where we give our views on what we think is happening in the markets, and there are various magazines which we write for as well. Now, before I go into the main information, I just want to highlight that the information I'm going to share with you for this presentation is purely for informational purposes only and not to be taken as advice. If you are new to financial markets and don't understand the risks, please consult a financial advisor. Now, there's a wonderful quote which says, "No one has ever won a game of chess by taking only forward moves. Sometimes you have to move backwards to get a better step forward." And given the current economic environment, I think it's really important to take a step back to really see where we've come from, where we are, and potentially where we're heading into. And so therefore, this is something which really hasn't been seen in Singapore, and I've been showing this for the last 3 or 4 months and highlighting exactly where we've come from and potentially where we're heading. And we can see that at the moment, we've actually gone through what we call tighter money reserves. We've actually come out of the bull market, come into this section over here, we've gone into tighter money, and we're starting to see falling real estate values, not so much in Asia, but definitely in the US and, of course, the European side of things. We've certainly had falling interest rates, and we haven't really started to see what we call rising share prices because we are really between the cusp between 7 and 8. We have seen rising commodity prices. So what does this mean? Technically speaking and fundamentally speaking, we are coming out of what we call a recession, although what you're hearing in the media is that we're in a major recession right now. And it takes time. It's not just an overnight situation. It does take time for these things to occur. So we're pretty much at a point where we're going to see something drastic happen. Now, here, I want to highlight the importance of the Vix Index. And you can see these 2 green vertical lines. And here in October 2011, there was a high fear in the market, and we're actually seeing right now no fear in the market, which we saw back in April 2012. So what that really means is because we're back at these levels right now, and on CNBC, Bloomberg, and BBC, as well as CNN, people are now starting to talk about the VIX. And it's really, really important to understand what this means. At this stage here, what we saw back in April, people were very complacent. They weren't really worried about the risks in the markets. They were thinking everything's going to be okay. The QE2, QE3's happened. The governments are looking after the financial currency situation. The Feds are stepping in, and everything's going to be okay. And it's at that point when you start seeing sudden things happen almost overnight, and people get tripped up or they get caught into a situation which they were not prepared for. So I want you to focus your eyes on these 2 green vertical lines, and I'm going to point out what they represent. This is when we saw the VIX make a key low, the markets ran up, we had the key high over here, and this is where there was a lot of fear. People weren't interested in getting involved with the markets. People are very interested in the markets right now because it's bullish, they're not scared, they're not worried, they think everything's okay. And that's when we had a VIX low. We're back there at that level again, and we saw a 9.7% decline in the US markets, followed through by several other economies as well. Also, we can notice that we've got a 5-wave structure forming. And typically, when this happens, markets move in waves of 3s and 5s. It's been proven. So when you see a situation like this, when especially you've got a 5-wave formation, there is a high probability of a major market turn. And that's why I'm saying that from a boom-bust scenario, we still need to see a catastrophic event which needs to take place. In 2006, I was doing tours around the USA, China, Russia, India, and right across Europe. And I made a statement, and I said that in the year 2007, between the months of June to October, there will be a catastrophic event that will take these markets down to lows not seen in decades. And 1 week before the high in 2007, I did an interview with a guy called Tim Balkin, who's based in the US. And at the time, he said, "Sandy, you're saying that the potential room for the markets is very limited right now, and you're saying that there's going to be a big market fall ahead." I said, "Yes, that's what the markets are telling us right now." And I'm actually at the same position right now saying that just ahead of us, there's a potential for another market decline, which will probably catch people off guard, and especially if you're not protected on your short side. So in other words, you may have long portfolios, but if you want to start hedging that, you need to start looking at taking some protective positions on that. Now, I want to talk about what's actually working right now. Typically speaking, especially in the UK and the US, people are looking at day trading and swing trading styles because this enables them to go into the markets very quickly and come out taking profits. So futures, you can look at stock indices, metals, energy, and agricultural. And last year, I came to Singapore in November. I was picked for a major talk on the commodity sector, mainly the energy sector. And at the time, I pointed out that there will be a huge interest in agricultural commodities. And since then, you're now seeing the news and the media talking about the rising food prices. And so agricultural commodities, we still actually have a long way to go. And energy, of course, we're seeing a surge there, back with crude oil. And, of course, the metals are getting quite interesting as well. Foreign exchange, for those of you that are looking to trade Forex, the euro dollar, pound dollar, Australian and Canadian dollar are also interesting currency pairs to trade right now. How many people in this room are not trading currencies or have no idea on how to trade currencies? Can I just quickly see a show of hands? So quite a lot of you. And how many of you are not trading commodities actively? And how many of you are actually trading stocks as a full-time portfolio? And some of you are doing nothing? Right. These are very interesting times in the markets right now. This is an opportunity for you to capitalize on some of the profitable moves. And what I've found through my own research here in Singapore or in Southeast Asia is most people are only trading local stocks. And you're missing out on the opportunity to capitalize on some of the volatile moves, especially in the US markets. The currency pairs are very interesting because if you're only used to trading stocks and you want to capitalize on short-term movements, then the currency markets are actually giving you the opportunity to do that. So day trading, you can use foreign exchange markets, and swing trading, use the futures or CFDs to capitalize on what we call the short-term or the swing trading moves. Now, just to give you an idea, in terms of volume, the S&P 500 obviously is one of the world's largest indices to trade. The Dow Jones is also a very interesting indices to trade, which mimics the S&P 500. And then we've got the NASDAQ. So you'll quite often hear in the media people talking about the S&P, Dow, NASDAQ. Gold, I think, is quite interesting. I think there's an opportunity for you to capitalize on an exponential move, which is coming up very, very soon. Of course, natural gas, crude oil has always been market movers. And then, of course, we've got the agricultural and the treasury notes and T-bonds, which most people are not really interested in because they're focusing on getting very quick moves from the markets. So you need to find out what's going to fit you. First of all, choose a market suitable for your time of day or night. And being here in Asia, you can, of course, do whatever you're doing during the daytime, come back in the evening, and then participate in the US market moves, which can actually offer some very, very good trading opportunities Monday to Friday. And then work with a comfortable volatility factor, which I'm going to talk about in just a few minutes. You also want to use the correct leverage for your account size. Over my experience, what I have found is that people are overtrading their account size. In other words, they're starting with very small account sizes, expecting to make huge amounts of money from maybe a $1,000, $2,000 account, which, to be honest, is very, very possible because you're trading a leveraged product. And I'll actually give you a real example of what's happened in the currency markets using a very small account size. But the reality is that you're probably not going to achieve that because you don't have the experience or the know-how on money management and position sizing. And then you want to create a trading and a business plan and then choose a strategy to fit you. There's no point you going out there buying a strategy or taking what they call an expert advisor or automated trading because it just might not work for you. And in essence, it's like buying a car. You will spend quite a bit of time going out there, finding the right vehicle, the right car to fit your own style. It's the same with trading strategy. You have to go out there and find something that's going to fit in with your lifestyle, also with your comfort zone in how much you are willing to take in terms of losses and drawdowns. Now, trading successfully, you can actually make this quite as simple as possible or as difficult as you like. But in essence, what you're trying to do is to create very, very, very simple rules, aim for consistency, and then increase your trade size. Coca-Cola is a very good example. Coca-Cola focuses on making a drink. And they don't go out there making 6, 7 different types of drinks. They focus on that one drink. They will increase their market share. And then, of course, they're going to be able to make maximum profits there. Successful traders will find one strategy or maybe 2 or 3 strategies at the most, focus on those strategies, and then apply them to different markets. But really keeping themselves disciplined and having the patience to wait for the opportunities to turn up. Now, just to give you a quick example, this is a snapshot of the S&P 500, and you can see on the top side that there are some red bars there. And these red bars highlight when something specific happened. And this something specific is when there were these opportunities of an event. All right? So you can see over a period of a year, so what we have on the bottom is what we call a time horizon, a price horizon, and then in between here we have patterns. And so the markets are three-dimensional. There's price, pattern, and time. And the red bars indicate when this event occurred. So just to give you a quick snapshot, in last year, January, there was 110 points. February, there was 95. March, there was 130. April, 99. In May, there was no trade on the long side, but on the short side, there was a profit of 122. June, we had a profit of 36. July, we lost 78. August, we lost 138 on the downside. September, again, was a profit of 146. And October, 80. So this is worth looking at. And it's actually very, very simple. And the problem is that most people are aware of it, but they just don't apply it. And so what you can see is that there's some very good net profitable results here, and it's worth actually applying this to your portfolio of trading strategies, and it's just simply an inside bar. All right, so there's two bars here, bar 1, bar 2, and the second bar is shorter in length than the first bar, and that's it. And so you can apply strategies looking for these opportunities, and you can place buy stop, sell stop orders, which are very, very easy to apply on the City Index platform. Just to give you a quick example, this is on a slightly longer term time frame. This is a weekly chart. We have a 2-bar setup over here. This is a negative bar. We were looking to sell here, which this bar triggered. We got stopped out between this bar and here. We lost 251 pips. We have the same 2-bar setup. We take a short position. The market runs down. And then we lock in the profit just to the high over here of 563. Minus 251 is the net result. And we're long with a stop here, and the market runs up, and you lock in 377. It's extremely simple. It takes about 5 minutes to learn this application, and you can actually generate some fairly positive results from the various markets. And this is on a weekly basis. You can actually apply it on a daily basis and even on an intraday basis. Now, the Parabolics are one of my favorite tools because you can learn how to apply this technique, and again on different time frames, but I'm going to talk about multiple time frames here. So waiting for a Parabolic SCR breakout, we're going to buy the break of the high bar for an uptrend, sell the break of the low bar on a downtrend. We're going to use a higher time frame to determine the trend and use lower time frame for entry and exit. So multiple time frame analysis, in essence, what you're doing is looking at a minimum of 2 time frames. So here, for example, you can see these dots on the bottom, the dots on the top. And essentially what it's doing is when the dots are on the top, it's putting pressure on the market to go down. When the dots are at the bottom, it's putting pressure on the market to lift the market up. So it's putting pressure on the shorts. Now, as you can see, the very last bar there, there's a dot there. And on a weekly time frame, it's telling you that now the weekly trend is likely to change, and therefore you would only be looking for short positions on your daily chart. All right? So essentially here, when we have the dots below the market, during the phase from here to here, you would never take a short position. You would only take a long position expecting the market to rally. And then from this point here to here, you only take short positions expecting the market to decline. And that's how you stay on the right side of the trend. One of the biggest problems that people face when they enter the markets or when they start out trading is that they don't incorporate what we call multiple time frame analysis. They also don't incorporate money management and risk position sizing. The Parabolic SCR assists you in telling you when the trend is about to change, and it simply plots these the dots or X's in some cases, telling you where the key levels in the markets are. You can also apply seasonality, or what we call the high probability trades. And so, for example, you can look at when the best times to trade are, and you can actually incorporate technical analysis by finding when the highest probability trades are. So at City Index, what we do, we give you access to the high probability trades for each month, and this is for September. Now, I just want to talk about very simple trading strategies on the trend analysis model. The biggest money is being made with trend trading. Find a trend reversal and ride the wave until it reverses again. This is not necessarily suitable for those people who are going in and out of the markets on a short-term basis, but you can actually apply it on a short-term time frame, let's say an hourly chart or even a 4-hourly chart. But the reality is that if you really want to make large sums of money, it's going to happen over a period of time, and it's not going to happen just in one day. But you have to find the time in the markets when there are trends existing, or there are times when the markets there's no trend. You have to be able to have the personality to be able to sit with these trends if you're the kind of person that doesn't have patience, this isn't going to work for you. But what you can see here is straight away you can notice that there are two boxes or two different colors, that there is the green shades and the red shades. And the green ones are where we had the profitable trades, and the red ones are where we had the losses. And straight away you can see 1, 2, 3, 4, 5 losses in a row. That's quite normal. You can actually have trading strategies which you can have 10, 12, 13, 14, 15 losses in a row. And most people are not accustomed to taking many losses in a row. What this is doing here is taking a short position, we exit here. I would love to tell you that we actually entered a short position there and we exited there. But that's a dream. The reality is we're taking small or medium-sized chunks out of the market. We then entered a long position here. Notice how far away the long entry is from the low. It's quite a distance away, and we only took a small position out of that. Then we had 5 losses in a row, and then we initiated this trade here. But can you notice straight away that the losses are much smaller than just the 2 big gains that we had here? That's a classical trend trading strategy. And this was taking a 1.75% risk. I can actually give you the results for every year, how many trades we took, what the results were in terms of percentage, the number of winners, the losers. But what's interesting is also, going back over the last decade, we noticed that in 2004, we didn't really have a great year. 2006 was a losing year. 2007 was a flat year. 2009 again was a losing year. We started off on a loss, but I'll show you exactly where we ended up as of this week. So not every year is a great year. And you shouldn't let that put you off. If you're trading, you're in this for the long term. You're not just in this for the short term. Trading is a long-term business. So we can also take the month-by-month analysis, and we can see here, typically on this strategy, April and August don't really do very, very well. And so we can actually stay away from this market during those times and then allocate those funds to a different market during these months here to increase our portfolio net return. Now, this is just showing you the effects of having money management and not having money management. Here, we are basing this on a simple one-contract basis. And here, what we're doing is using a geometrical growth model, which, in other words, what we're doing is taking our profits, putting it back into the portfolio, and increasing our trade size. And the results are very, very interesting. This is $1,400 to $44,000 on a single contract basis. That means we were entering and exiting the market just using one contract. And we just simply follow the rules on one market. And so the results, as you can see, are quite reasonable. I can then go in and change the parameters. So what I've done here is I've said to myself, I'm quite willing to take more losses. I'm quite willing to take bigger losses if the results are net favorable. So here what I've done is increase the risk. I've taken the risk from 1.75 to 2.75. And the average person doesn't want to take bigger risks. They want bigger returns, but they're not necessarily accustomed to taking bigger risks, and the results are quite dramatic. So here we lost 407 trades and only won 147 trades over the same time period. The question I would ask you is, are you willing to take more losses than wins? And most people are not conditioned to do that. So we have a 4-to-1 risk-reward ratio. That means for every dollar, we're getting $4 on a return basis, and we gain 725% on the account. So same market, same strategy, just changing one parameter, and that's the results. So 1,400 to 128,000 by applying a slight modification. And this is what it looks like. So now you can see we actually had a much greater gain. We had a gain over here. We eliminated the frequency of the losses, although we still took a loss. We started the year with a loss, and this is exactly where we are as of yesterday. The trade on the long side has been closed down. And for those of you that are members at City Index, you would have had the opportunity to capitalize on this move because we've been talking about it whilst we're here in Singapore. And at the moment, dollar Swiss is short at 95.72, and it's already telling us where to put our stop and where we would go long. Now, this is a different trend model, and this is measuring the volatility, but it's also measuring what we call the directional move in the market, and the colors would change according to the volatility and the range expansion. So essentially, it would go from blue to red to blue to red. For obvious purposes, I cannot reveal the codes behind this, but this type of information is readily available for those of you that are interested in this. On the FTSE 100, on a daily trend, so we're not jumping in and out of the markets very quickly, but on a daily trend, this has delivered 12,800 per single contract. On the US, we'd captured 8,050. We also highlight what the patterns are on the markets and where the potential key levels are for your target prices. Here, this is crude oil on a weekly trend. We had a short position initiated from here, looking at a target price of 80.80. So we'd actually highlight the key support levels and the resistance levels. And once again on CNBC, as I was saying, that look, once we reach 80.80, we're looking for crude oil to then go up to $96. And that's exactly what's happened right now. And at this point in time, crude oil appears to be bullish, except for the pattern that it's given us this particular week. And so what we notice is that finally, after these red bars, the bar has turned blue. We would buy the break of the blue bar with a stop at the low, and we're now targeting $100 and $106 on crude oil. So capturing short-term moves, because some people are looking for very short-term trading strategies. Here, what we're doing is looking at range expansion. And so ideally, what we're doing is waiting for the bar to close outside of a specific given range. And then we're looking for the market to go back to mean reversion. So here, we will take a short position, and our stop would be equal to the distance of where we're targeting our profit. In this instance, we took a profit. We then took a short position here, and our distance of stop is between here to here. So actually, we got stopped out. We took a profit on this one over here very quickly, and then we took a short position here. And that then went up to profit level over here. We took a short position over here, profit achieved over here, and then a short position here was achieved by a profit, and another one here was followed by a profit, because markets often come back to what we call equilibrium. And so these are the type of strategies that we're teaching at City Index. Now, this is what we call System Alpha, and this is very short-term traders. So each day we highlight key levels via media channels, and we tell you, or what I'm telling you, what the key levels that I'm watching out for on a daily basis. I'm looking for support and resistance, and this is ideally suitable for people who just want to go in very quickly and get out very quickly. And so we would actually look for support and resistance between these key levels. So here we're looking for a support area. We'd actually buy on this particular bar here, and a target price would be reached there. This one here, we're looking for a long move to here, a short move initiated by this one here, and targets being reached. So again, if this is something quite useful, then you can actually apply to or register to get access to this type of models here. So last week, I was doing a guest spot for our next speaker. And on that day, I said that euro-dollar would look for support at 123.22 to reach for 123.84, and a failure below support would test 122.70. And actually at the event, what we noticed is that the market had actually found support and reached target for a $1,200 profit on a single contract basis. This is the results, and this is over a 5-day trading period. We can see that there's 7,316 or 14,632 Sing dollars over a 5-day period. If you're applying this type of strategy, and these are actually documented each day on the media channels. This is a different type of strategy, just based purely on time. We're not using technical analysis on what we call price or on the time structure at the bottom. We're actually looking for very key specific times in the currency markets. Here we notice that there's a blue bar at a very specific time. We're looking to take a long position at 21.75 with a target at 22.25, and that target's been achieved. Later on during the day, we had a short position initiated here, and we took a stop loss. This model looks for a 50-point gain with a 60-point stop loss. And some people might think, well, actually, your risk-to-reward ratio doesn't match, but it's the frequency of winners which actually work out in our advantage. And so, again, last week, we were highlighting during the day that we actually had a short position here. That's our target price, and there the target's been reached, and the trade is actually closed off. Using the City Index platform, again, it's very simple to apply these types of rules and strategies. This is actually yesterday, and so what we notice is that this is yesterday's prices, and the day before, we had a short position initiated here, and a second later on in the afternoon, a short position. We were not stopped out, but this line here tells us where our target is to take a profit. This one tells us where our target price is to take a profit, and yesterday, we are initiating a short position. Our target's been reached on this day for all three levels, and currently right now, euro-dollar is still facing a short position, almost got stopped out, but we're still live on this trade here, looking for euro-dollar to come down into Monday and Tuesday's trading session. And this is the kind of results that you can get from very short-term trading. So we had 44 trades in the month of July, and we had 960 pips losing, 1,400 pips winning, so we had a net result of 440 pips, and that's £8,800, or double that will give you your Sing dollars. And that's a typical month. That's not a good month. It's not a bad month. These are the results for August right now. We're seeing on a profit of over 16,400 Sing dollars. And these are applying very, very simple rules, looking at key markets which you can get access to each day. And so essentially what I'm saying is that the short-term trading strategies are working very, very well right now. So My question to you is, what's your personal financial target? And Leonardo da Vinci said, knowing is not enough, we must apply. Being willing is not enough, we must do. And the reason I'm sharing this quote with you is simply due to the fact that because we've just entered what we call the low volatility phase, there's an opportunity. You're actually sitting on a time window right now where there's a huge opportunity for a major market move, a historical market move that's about to potentially happen. And hence, I've actually extended my stay in Singapore for you to come and learn about what these key levels are going to be. Because once you apply the right tools, the right techniques, apply the right money management strategies, you can capitalize on what's pretty much ahead for the next month or so. So if you're willing to learn and believe you can actually do this, because this is actually quite simple, and you can follow simple rules, then there's an opportunity for you to come and learn more about this. And so City Index are offering what we call the upcoming trading opportunities, which has never been seen in Singapore. And so we're actually teaching you what to trade, when to trade, where the key price levels are. So we're actually giving you very key price levels for very specific markets. But more importantly, how to manage that trade. It's very easy to get into a market, but essentially you need to figure out where you're going to exit that trade. And so what we're doing is teaching you step by step how to do this. So upcoming trading opportunities in the UK, we're teaching this once a month. And we typically do it at the beginning of the month. The Dow fell 534 points after we'd spotted the signal on the Saturday. FTSE fell 346 points in 2 days, and the dollar-yen gained 252 pips on the Monday because the government intervened on that weekend. And then crude oil gained 1,133 points over 21 days. So you can receive, once you're a member at City Index, you can learn about income trading strategies. You can access all the free seminars which we run. You can learn step by step how to create strategies and see how we analyze the markets each day. But you'll also get access to some of these reports 3 times a week, and it's free. So if you're interested in that, please join my colleagues just at the top of those stairs outside the City Index booth, and you can learn more about how you can gain access to this. But also, I've extended my stay for an extra week, and the reason I've done that is just over the last week or so, the last week to 2 weeks, I've met a lot of people here in Singapore who are crying out for professional trading strategies and who really want to learn how to trade professionally. And I'm glad that CS has actually organized this event because this gives you access to professional traders and learning how to capitalize in the current markets. And I think events like this are really much needed in the current economic environment. But with City Index, we're doing a very special event, and it's Saturday the 8th of September from 10 till 2, which you'll actually get to see the trend models in action live, and you'll also get to see where the key levels are in the markets. You'll learn about simple trading strategies. I'm also going to discuss very short-term trading patterns for fast profits, which I've just pretty much shown over here. But also I'm going to reveal a simple trading strategy which has delivered $240,000 on the crude oil market. Now, it's not so much the money that was returned on the crude oil market, but what was interesting is how you can just change a very simple parameter on your everyday software package and then get very different results, part of which I've just shown you on the dollar Swiss model. So if you're interested in this, please register with my clients at the City Index booth, and we'll be happy to assist you in getting started. We also have another opportunity this Wednesday where you get a 3-hour session, 2.5 to 3 hour session on learning how to capitalize on the current market environments. Now, for those of you that are interested in also receiving the free reports on the daily levels, feel free to send your texts right now on 9166-3100, and over the next 5 or 10 minutes, for those of you that have registered, your name and email address, you'll be put onto the register for receiving the daily reports for the currencies, the commodities, and also the stock indices. So if you're interested in that, please let us know. Thank you very much, and I look forward to seeing you during the break. Thank you.